Very, very good.
All right, we'll go ahead and get started with the panel on smart contracts, exponential application, and moderator. Moderating this panel will be Ranica Arrowsmith, technology editor at Accounting Today. Ms. Arrowsmith previously covered medical technology for medical design technology, medical product outsourcing, and orthopedic design and technology magazine. On our panel today will be Kieren James Lubin, founder and chief product officer of Blockapps. Kieren is a PhD candidate in mathematical physics at UC Berkeley. He has entered the blockchain space as Blockapps API lead. His contributions include popular articles, writing the Blockapps API, and pieces of the Ethereum Haskell client, and organizing and engaging in blockchain research. Bo Shevchik, co-chair of the Association of Government Accountants Blockchain Working Group. AGA represents government financial management professionals at the federal, state, and local levels. Members who number more than 16,000 are local finance directors, state auditors, federal chief financial officers, academicians, and private sector leaders. David Montes, who is not here at the moment, but if he comes by, might as well give his intro so you guys know who he is. He is the managing director in financial services strategy at KPMG. Mr. Montes has 18 years of experience providing strategic insight and implementation support to large financial services companies. He's a lead in KPMG's blockchain practice focused on delivering banking and payments advisory services across strategy and execution to clients globally. And finally on our panel is Mr. Cale Teeter, senior software development engineer at Microsoft. Mr. Teeter has over 15 years of experience as a software developer working with large enterprises. At Microsoft, he works closely with engineering groups in Azure and developer tools, and with the business development and engineering team on the first-party services that Microsoft is helping build in the blockchain space. So with that, I'll give it away to Mrs. Arrowsmith.
Hi, everyone. Is it on? Yeah, great. So I'm Ranica from Accounting Today. I'm the technology editor, and I just want to start off by, can I get a show of hands from anyone here who is an accounting professional? Great, and also finance, if you consider yourself finance. Okay, great. It's a good crowd. All right, so we're going to jump right in, and we're going to start by just defining what a smart contract is and what its relationship to blockchain is. I'm going to throw that to Kieren.
All right, thanks, Ranica. So again, I'm Kieren, founder and chief product officer at Blockapps, and our business is to support the creation of smart contracts and make some ourselves. So fairly familiar with them. In a sense, for the audience here, smart contracts allow individuals and businesses to automate business processes, especially multi-corporate, really multi-tenant business processes, where in the previous sort of state you have lots of point-to-point integrations to do with things like EDI or various APIs. The smart contract itself can settle a system of record, a ledger across multiple corporates, and your experience with them would be sort of like dealing with a workflow engine of sorts.
Does anybody else on the panel have like a different way of explaining what a smart contract might be?
Yeah, this is Bo Shevchik. So yeah, basically what you said. I think they exist currently. What we're more going to talk about is how they apply to blockchain. But there are many instances where a particular event happens, smart contract triggers, and then some sort of a payment happens. But there's a lot to that, if you will, workflow, as you said, right? I mean, where does it start and where does it end? Because a payment is initiated, an obligation from a federal speak point of view has to be there to make sure that the money's there, and then you have to actually settle it in an accounting system. So there's a lot of things that actually happen.
Right, and so Cale, I wonder if you could explain how exactly a contract would be relevant to finance and accounting professionals, and how they work for them.
Yeah, so just to comment on the first thing there about smart contracts, I mean, I think the unique value that we see, working with enterprise customers with this is, think of it as kind of like middleware or some of the business logic that's in your application. So you mentioned workflow. But being able to build that in a unique way that we couldn't do before, we could do, but it was kind of cumbersome. So being able to say, when I write this logic, this business logic that everyone's going to agree on, I can't really change it on the fly without people seeing that. And this is one of the unique values I think that smart contracts and blockchain provide. Think of it as kind of like code signing. Like, we cannot modify even a single bit of this thing without everybody kind of agreeing that this is the new business logic that we're going to do. I think, obviously, from the fintech space and accounting side, working with customers, obviously you can see the natural alignment with like a ledger and the transactions that are going to flow through a financial institution in a smart contract. So writing your business logic as opposed to writing it in a back-end centralized system, writing it in such a way that we can kind of audit it and guarantee that the code that we wrote is the code that got executed. And the way these kind of work is obviously through the blockchain, we actually have all the nodes kind of validate that this is happening. This way we have a much secure infrastructure than we had before.
Right, so whenever you read about smart contracts, you always hear about, and it's obvious, their application to legal and also banking. But for accountants, how can we help accountants understand how they can use it in their firm and, make it apply? This is for anybody to take.
Okay, so first of all, I was supposed to actually read a disclaimer, right? So my name is Shevchik. I actually, the AGA is sort of a part-time thing. I do actually work for the Federal Reserve Bank of Boston, and the opinions stated by me are mine and mine alone. So there you go. That's that.
And I'll just jump on that and say, if anybody has questions throughout, feel free to raise your hand and we'll take them.
Right, but on the system that we work for we actually work with Treasury on a system called the invoice processing platform. It's sort of middleware, if you will, that sits in the middle between a vendor's contract with an agency, and rather than a vendor going in and sending in multiple invoices via different systems, via email, via paper, via whatever, there's this one portal that Treasury wants everybody to use. And what we're trying to do is we're trying to make sure that the contracts, the POs that are generated from the contract that are loaded onto this platform called the invoice processing platform, really have workflow in it. They do have triggers. There are things that happen that make it a lot easier for not just the accountants, but also the vendors that actually submit invoices, the program managers that actually then have to actually say this work was actually done. So that actually moves forward. And at the end of the day, it's the accountants that actually account for that, right? And then you get into this thing called triple entry accounting, which it's probably not for this session, but that links the one set of folks to another set of folks. But it just makes it easier.
And Bill, I'm gonna stay with you and ask you, could we see these types of contracts completely replace legal contracts as we know them today?
It's a good thing, right? So I work in Washington, D.C., and there's a lot of lawyers, right? So, so I actually asked this question, and one guy basically came back to me and said, well, what is a legal contract? So that you have to kind of take a look at that. Well, a legal contract is simply, Ranica, you and I decide that you're going to do something or I'm going to do something, and one of us is going to then exchange some funds for that. From where I sit, and I'm not a lawyer, right? That's a legal contract. The thing is to me, always, whether it's on blockchain or whether it's a legal contract between you and I, is it enforceable? I think that's the bigger question that I have. So the story that I always tell, back I counted it 25 years ago, I was actually the director, country manager for Coca-Cola in Ukraine. So this was the fall of the Soviet Union. We started up Coca-Cola there, and one of the things that we did was, we had bottlers, and we had to actually get contracts to these bottlers. So, the Coca-Cola company bottling contract is about this thick. It's pretty thick, a lot of pages. We, in Norway and in Austria, Vienna, we translated English into Ukrainian. We gave it to the Soviet-style, director of the bottling plant in Kiev. And basically, he looked at it and he said, well, what the heck, right? I guess I could sign this. And we said, well, you should sign this, so this way you can bottle Coca-Cola. But then the question is what if he did something wrong? How do we enforce that? So enforcement always, to me, is the thing. I think the technical end, and I think the parallel that I draw between blockchain and smart contracts and that story is the technical is interesting and it's difficult, but it's doable. It's the execution of it all that actually is very difficult and change is hard.
Yeah, I think one thing to add to the technical aspect of it is, saying that something's legal, that we wrote in a smart contract, is essentially saying whoever's going to enforce that or the legal aspect has to kind of know code, right, and know like how to read that thing and parse that thing. And so that's one of the areas I think where it's a bit of a gap right now. We should focus on is building better tooling around these smart contracts such that they have kind of better interfaces to allow non-technical users to kind of put these together and know what the logic actually is, as opposed to these can get very complex really quickly. And you could really need like a software engineering degree to figure out what's happening there. So I think that's one area that we could kind of focus on to help.
Yeah, and Kieren, I'm just gonna throw this to you, both you and Cale. In the accounting world, I'm always sort of talking to accountants about, they've moved to the cloud or they're using a lot of technology now and they have less and less face-to-face time with their clients, which is a great thing. It allows for flexibility and they get a lot more work done. They can take on more clients, but then there's a balance. How do we keep that relationship? So removing this human aspect or the middleman from smart contracts and from the contract flow, what kind of effect does that have? I mean, you work with all kinds of blockchain stuff, so the human touch, where do you see that?
Yeah, it's a big and interesting question, I guess. So for all the audit firms in the room who have big blockchain practices and are speaking a lot in the media about it, is it going to be a few huge implementations and then a whole lot less work in the future? And I would say it's possible. It seems like a pretty long time scale for that to happen. Most of our systems, which are even pilot production or production, still have a parallel component that's your existing business process, existing ERP, whatnot, and then the data is sort of secondarily also on the blockchain systems. People are not really fully ready to give up current processes, current controls, current business models, etc. It'll be a pretty long time scale, especially from really a business process re-engineering standpoint for a large enterprise to fully move its general ledger to the blockchain technology. That said, I think it will happen, and so sort of get on the boat moment, and that will be the same business models and new models when it occurs.
Yeah, just to add to that, I think the other thing that is kind of evolving right now in front of us when you see products like Quorum and some of these features that they bring to the table coming out, they kind of complement what's going on with a smart contract, for instance. So smart contracts in the public sense, or like that public blockchain, full transparency, we can see everything that's happening, and literally bytecode is out there for someone to grab. So there's all kind of things to think around IP rights and these different things that happen when you have an enterprise that's starting to engage with this model. So I think as the evolution of blockchains come along, it's going to help us even further, and people get more comfortable with it because we can provide, selective disclosure of certain pieces of code and these kind of things, and we can kind of shield pieces of that in order to protect the way the enterprise actually operates as opposed to the public blockchain.
I'll just sort of add to that. One of the things that, I grew up in the New York metropolitan area, so I'm very familiar with the city, et cetera, but I've been down in DC and away for quite a while. So I use Uber, right? And it's interesting in pulling into Penn Station, you walk out, there's still a lot of yellow cabs out there, right? Uber may be the new hot thing, still a lot of yellow cabs. So the thing is, change is hard, change is slow. People get used to doing things the way they like to do it. And I think it is a compliment, right, to the way that things do. There's always going to be leaders that are going to embrace this, trust it, and move it forward. But I don't think it's going to do away with everything.
Can we get one of you guys to go on the record and give a timeline of when the smart contract will be the norm? No. You're not going to do it?
3 years.
From Kieren himself. Okay, so guys, what about malfeasance and fraud? There's a lot, whenever I go to these blockchain events, somebody always brings up, oh, but Bitcoin was hacked. But of course, it's not the blockchain that's hacked, it's username. I don't fully understand it, but it's not actually the blockchain. So how can smart contracts be protected from that kind of thing? How does that work?
Yeah, and clarification for the audience. So the majority of public network blockchain, or really all, maybe with a tiny number of exceptions of public network blockchain attacks have been on particular either centralized applications or centralized stores of, say, private keys or that sort of thing, or on application logic and not on the core protocol in the case of the DAO, for instance. So the core protocol is remarkably solid for nearly a decade now. I would say that a lot of this is just there's a lot of fear out there because of lack of understanding of how the technology works, and technology is complex. I wouldn't expect sort of the average consumer to understand it at a deep level. So I think awareness will just sort of happen in time, and that people will get used to the technology even if they don't really see the underlying way that it works. Their lives will be slightly different and efficient.
Yeah, so again, I go back to what I know, so the invoice processing platform, not that I'm selling it, right? But the thing is that one of the things that we do is, so in the past, right, when an agency had a contract, they did an RFP, there was a winner, that company services, that agency provides services or goods, typically then invoices on a monthly basis. And, in days gone by, basically, they would actually send it by paper. They would actually even deliver it, and it would be hand stamped that it was actually delivered on such and such. They could send it. They made great leaps and bounds, and they were sending it by email with PDFs attached, right? Not so good. But now, at least, where we are, and we're not certainly on blockchain, but we are sort of a central node. You send it through IBP, and what happens is that the agency sees the purchase order, the vendor sees the purchase order. And then you see all the activity that's actually occurred against that purchase order, sort of a smart contract type thing, right? Whether it's executed instantaneously or triggered by the agency's supplying or submitting an invoice. But you can actually see all the stuff that is actually, all the activity that's happened, payment, rejection, invoice submission. And now if, Ranica, you and I have a disagreement, I don't go to my books, and you don't go to your books. We actually look at this one central place. We say, well, it's all right there. And I don't have to say, well, I know I sent that invoice on January 23rd at 3:45 p.m. with a PDF that was 5 meg, right? No. So it's all right there. And I think that, from our perspective, has reduced, let's say, phone calls by 90 to 95%, because people have answers at their fingertips. And we're looking at the Rubik's Cube from different faces, but we're looking at the same stuff.
I just want to add that for the actual smart contracts themselves, you can make business logic errors in them that would lead to unexpected results. But the languages are sort of circumscribed so that you do less of that. And also, there are a number of practices emerging. People will do smart contract security audits, and even the blockchain protocol level as well.
Yeah, just to add to what Kieren mentioned, we're working with a lot of partners in that space around formal verification and these different types of models to validate smart contract for logic errors and these kind of things that might result in things like the DAO that you saw out there and those kind of pieces. But I think, again, it goes back to kind of a tooling aspect of being able to make this easier. People should not be sitting down and writing smart contracts from scratch. Obviously, it's just like anything in software development. As we build functions and different things into, in the case of Microsoft, like our operating system, over time, we don't go back and rewrite those same things again because they've been hardened over years. Same thing's going to happen in this space, right? We have these experts that are doing security audits and all these different verification. They can provide that back to the community and allow people to start using those, which are hardened functions. And then you can kind of bank on those. You should be writing the transfer function. That should already been written and hardened and proven thousands of times. So I think that when we get to that stage, we can actually do that. I think it's going to make it much more powerful for people to start leveraging these.
Well, what kind of regulatory action or activity has to happen for a smart contract to become enforceable and to stand up in court?
Well, I don't think that, other than understanding code, I really don't think that there's too much difference. I mean, if you talk to the accounting profession, to the auditing profession, they're using tools that are much more sophisticated than, when they had a paper ledger and, green eye shades or whatever. So I don't really see, or I can't talk to what exactly regulatorily has to change. Just knowledge and education, which is what we're trying to do with the 16,000 members of the government financial community in the United States.
As they become, more in use, I'm sure there will be court action and other things that will set precedents and things like that.
I just think that, the thing that happens is, you get a smart contract, it executes, there's less work for the human person to do, less interaction, less manual entry and manual error that occurs. However, then, you kind of marry that with artificial intelligence, and you start taking a look at, what's happening here. And then you can probably, with all that data, come up with some pretty interesting observations and recommendations going forward. So I think that community becomes more proactive. It's not a gotcha type of situation. It's more of a, what are you doing and how can we help you?
In my view, there's one big barrier, and that's that, at least in the public network and to some extent in a consortium mission network, the contracts execute themselves, and they may not reflect the intent of the original agreement. Again, due to some programming issue or other reason, and it may be difficult at a technical level to revert them without an annotated legal process. And then there's not been a legal process. You need to decide if the intent of the contract was the same as the code or not, and then there's a kind of a reconciliation to do. So if there were some kind of good precedent there, I think would be pretty easy to make use.
Does anybody have any questions so far? Yes, go ahead.
We haven't really distinguished between self-enforcing smart contracts and whatever we call contracts now that are not really the original design. Self-enforcing contract would be when certain conditions happen, certain digital funds automatically get transferred. So if I write a script in Ethereum and I get the participant's signature to trigger certain code executions, again, there is no judge or enforcer. Certain amount of Ether coins are being transferred to the receiving party. That's it. So the question is, well, there are not enough digital assets in the world to cover such self-enforcing contracts. That's why we've resorted to ones that are sort of that result in a decision, but we need an enforcer. Do you see any solution to this? Any assets tied to specifically digital? What is going to solve this problem?
I'm not sure I fully understand the question. Let me try to restate it. So the question is, there's a smart contract which is fully self-enforcing, but you're saying that it doesn't have enough collateral or something of that nature.
That's right. If I want to do commerce and sign a $1 billion contract with someone, there's just, if I have a self-enforcing contract in Ether, there's just not enough Ethereum coins to enforce the contract. I can't even find that many coins to deposit or transfer. So what is going to, how's this going to pan out?
I think it's more a technical issue than a systemic issue. I think there's probably a number of solutions. I mean, contracts have invoicing schedules, which you can kind of bake into the logic. And if you miss a payment, you can set the contract in a state that it triggers some further action, and that can all be automated also. Maybe the tricky part is if you're moving US dollars and trying to synchronize them with the public chain or some off-chain element. But even then, you would just create a representation of those US dollars, which is not limited by, say, the supply and market factor, and reflect that in the contract as well. So the contract can have US ledger balances in some sense that could reflect the real world payment terms.
Yeah, just in the real world, and I don't know how this is going to apply to smart contracts in Ethereum, but if there's a contract out there, and at least in the federal space, you can have a contract for $10 million, and once we put that up there, those funds need to be obligated. That's a term, right? Obligated by the agency, and then therefore the vendor can actually, they're available. They've been committed. They can actually invoice against those. If all of a sudden you basically invoice out of line and there are no more funds and you submit another invoice, it'll kick out. There'll be an exception. So I'm not sure something like that could be put in. If there's not enough funds, there's not enough funds.
Thanks for the question. Anybody else for right now? Yes.
So given smart contract is ERP and a lot of different people or organizations that's involved, right? It's not like the first movers are going to get that much advantage until you get that critical mass. So what should we be looking for that critical mass to adopt, right? So for example, Walmart, when they adopted the chip, that was when you start getting more manufacturers embedding those things. What should we be looking out for from the industry to say, oh, that's kind of the ball that everybody is going to start adopting this. Did that make sense?
So I can give you maybe a two-part answer. One is that it's useful when you can get a whole industry on board at the time, and then sometimes necessary to get a whole value chain to really see the return on investment of, say, a consortium or permission blockchain project. To do sort of an end-to-end transaction of some kind, you may need everyone. And so if you can sign up a couple people, though, especially the whales in an industry, you may get the rest. And it's sort of how old EDI initiatives work. So find the whale, maybe, and maybe they'll want to be the first one and kind of set the rules and the data model standards and the contract rule standards at the beginning, and then onboard everyone else later, iteratively. The second point I'd say is what we look for in some sense is if you have an industry with a clearinghouse that sort of sits in the middle and more or less their job is to establish the golden record for that whole industry, that's a place to look as a possible entry point. They may want to partner. They may feel threatened by the technology also. We've seen sort of some of the big projects coming out, like the DCCC, for instance. They're quite serious, it seems, from their public statements. And maybe it's because their job is to be the golden record. So it's a good place to look.
Yeah, I would just comment to add to that is, looking for use cases where there's going to be significant value, and it's kind of hard. Sometimes a lot of people, especially when they're getting started with blockchain, are looking for low-hanging fruit or kind of the easy way in of like, one of them that always comes up a lot, and I'm not saying there's real use cases for it, is like a rewards or a loyalty point system kind of things. There's definitely a place for that, and blockchain can definitely add value there, but a lot of times people kind of see that as like an easy point of entry. Let me just dip my toe in the water here. But I would recommend, like, when we work with customers, is more like looking for that bigger value where blockchain actually fits, as opposed to like, trying to supplant it somewhere where maybe it will work, but it's not really going to provide much business value. So a lot of times we're actually like trying to pull that out of customers, like really, where's the value here? Like, we're actually questioning why they want to do it, and try to get to that, because that'll give the real big gold stars for people and shining lights on this technology.
And I'll echo on that. In a lot of ways, you do find the big whales, but you also find and bifurcate, if you will, your contracts and then your invoice flow. And you kind of take a look at, well, can we actually do this? So telecom, utilities, invoices, some other or very small invoice amounts, which really you would want to basically trigger a payment automatically, if you will, without actually having any approval and workflow. Those kind of things. And then, again, you find somebody that's actually willing to pilot that, it's a success, and then you basically cascade that throughout the network that you're operating in. So that's the best way that we've found to do that.
All right, so I definitely want to get to this. Thank you for those questions. This next question for the accountants in the room, audit. So how do we fit smart contracts into audit processes? How can accountants be assured that that's going to work? Go ahead.
I'll start.
Yeah.
So I most of the accounting, or most of the big accounting consultancies also have IT audit practices, and so have a pretty strong security team, a good amount of in-house software development and security expertise. So maybe start with those people who have to actually understand what smart contracts are and how the data integrity of everything is maintained, how the system works, so that we still need to understand at kind of systems level what a blockchain is to be able to audit. So I would start with the technical folks there, and then identify some places where I guess the manual cost is the greatest, and where audit professionals don't want that manual cost to be huge, and maybe try to get a pilot with customers.
Yeah, I think auditors are hired by companies to basically say that it's transparent, that the transactions are being processed properly, and it's all correct, so that they need that assurance for their investors, et cetera, for the company to run that. If everything's on blockchain and if it's all registered there, it's all there for you to see in real time. It makes their job a lot easier. I'm not saying that you're going to replace those folks. I just think that their job will change.
And I think one other thing to think about with this is thinking about what you want to put on the blockchain versus some of the off-chain counterparts that go along with that, like a state channel or some off-chain storage. That's super important when you're building these applications. It's easy to just say, we'll just put everything on the blockchain or in a smart contract. But the reality is that's not real. We really want to think about the attributes that are going to make sense from an auditing perspective, from a regulatory perspective, the things that we really need in there to prove. And we can get those in there and then supplant them with off-chain storage and some of the technology that works along with that in order to complement it and make it an actual solution.
Yeah, I think, not to plug any certain company, but I just recently was talking to Thomson Reuters. The accountants may be very familiar with their checkmate product. And they have very intelligent systems now that are really making the audit process so much easier. And I think smart contracts will actually make it easier too, not harder. Okay. So we're going to wrap up with some real-world use case scenarios. Are there any? If there are not, what could they be? I'll just go to any of you guys.
Any of us can answer.
You said 3 years ago.
Yeah. I think supply chain management broadly is actually easier than financial services. For instance, so we do have a production system in supply chain management that's more or less an inventory track and trace system across a network of vendors. So actually a sincere consortium and has live business data. So those are easier just from a risk perspective, in that you can run it parallel, but you can probably see some ROI in terms of just inventory loss, for instance, or and then you can add financial aspects later, like invoicing, purchase order financing, all that sort of thing as well. So that's sort of I would say the financial institutions were very early investors in blockchain technology. Some of them may service the public network asset classes and are starting to. Some of them may use the technology as a ledger reconciliation tool, but their requirements in terms of just the assurance are the highest. So it take a lot longer to get those to production than some others. We also have some startups in production, actually, in diverse industries. One in ticketing, a lot of ticketing fraud.
So what kind of, like, parking tickets?
Sports fence.
Oh, like helping. Oh, okay. Anything else that?
Yeah, so again, not something that's real yet, but something that I would dream about. So in the federal space, the functions really are bifurcated as well. So in a sense, you've got 3 silos. You've got the acquisitions guys, and they've got a different acquisitions writing system, blah, blah, blah. They look at the vendors, they do all this stuff, and they take direction from a program manager typically, and they write a contract. And it goes through an RFP process that you don't want to know about, right? So finally we get a contract. Then you have the financial management system, totally different systems, right? They really worry about making sure that there's enough funds out there, that it's obligated, and that at the end of the day, they don't have any audit findings that they have to actually do corrective action plans for. And then you've got the program office who ultimately will use what this all actually results in. And oftentimes I will say that it is, shall we say, a challenge to have these three different silos talk to each other. What I would like to see from smart contracts is some sort of a way of bridging that divide, if you will. Oftentimes the contracting world writes very, very detailed and rich contracts where POs are generated from task orders, etc. Oftentimes a very diluted amount of information passes over to the financial management system, and then finally over to the program management system. And again, they're still not talking to each other. And I can see whether it's via blockchain or via smart contracts, this actually being improved. So.
Yeah, I think just to echo Kieren, supply chain is obviously kind of one that's natural to this, where we have a lot of parties that are sharing, but the trade finance aspect of that, letters of credit and these kind of things are actually aspects that Microsoft has been after originally, even internally, to kind of prove out this technology to say, is this something real? So taking some baby steps that way, but getting some real value through a supply chain, like starting small with letter of credit and working your way up through the supply chain, and ultimately like bill of ladings and these kind of things, proving them out, I think is interesting. So I think in those cases, the other one is provenance tracking, which kind of goes along with supply chain, and the other big one that we haven't kind of mentioned here, but it was mentioned earlier, was with these smart contracts, we still need kind of strong identity solutions around this kind of thing. So, the UPort guys and the work even that our team at Microsoft is working on decentralized identity, I think these are key to make these solutions work. Writing the smart contract is one thing, but having actors actually execute that in the system is crucial for these things to work. So I think that's not one that's going to get solved overnight. I mean, it's obviously a hard thing to do. We've been working on it for a long time, and people in the industry have. So I just think it's something that's crucial to make this whole system work.
Yeah, and I know David from KPMG is not here, but I know the Big Four are investing a lot of money in blockchain too. And Deloitte has proof of concept already with smart contracts that their labs going. Thanks, guys. We're going to open it up for a couple quick questions just before lunch. Does anybody have any questions at all?
The auditing question. Do you think there should be an auditing standard around blockchain and smart contracts? Because there's none right now.
I would say yes, but and the thought would be we should probably, or you should identify a couple set of well-scoped use cases, do them, and then standardize. It'd be hard to make a really big standard right now. Technology is still very rapidly improving.
Anybody else? Right over here.
I'll see if I can project. In their current incarnation, do smart contracts absolutely require cryptocurrencies, or do they interface with the real cash world?
Yeah, I think so. The cryptocurrency element is not strictly necessary unless you're taking a hardline definition of smart contract. That said, interfacing with the real or legacy world is always going to require some off-chain element. The actual for U.S. dollar movements or just data that you need for the contract execution. You can bring that in a trusted, trustless manner with digital signatures, but there's still always an integration component.
We'll take one more question before we go. We don't have there.
Can ERP systems include smart contracts, or does it have to be in a separate blockchain environment?
So, in my opinion, you can, kind of integrate iteratively. I would say the answer is yes. Maybe to start, you're sort of sending CSVs back and forth in some sense between the two systems and kind of a two-way synchronization. But maybe there'll be a blockchain-based natively ERP system in the next 3 years.
I think just to add to that is folks like Kieren's product that was Strato is kind of important in that respect when we do this interoperability. So building APIs that are easy to interoperate between these from a technical sense makes that kind of integration possible, I think. When we're interfacing with RAWs, JSON RPC interfaces, and things like that that are specific to blockchain, It's a bit harder, we have to do a lot more work in order to make that work. But I think that component as well as some of the off-chain components, obviously the ERP system being an off-chain component itself, would work with it.
And I'd say that you would want them to be, and because a lot of things are still going to be created in ERPs. They're not going to go away.
All right, I don't want to delay the lunch, so thank you, Kieren, Cale, and Bo. Thank you